All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Very, very interesting open in the market off of a very interesting close yesterday. And it's a market where we've talked extensively about the death of this kind of stock bond rotation, where big money is going from bonds to stock and stocks to bonds. One of the big arguments of market collapse is, well, you got to see money go from stocks into bonds. Well, central banks around the world have effectively killed the bond market in that way with such low rates that it just doesn't make sense to go from stocks to bonds. So what do we see? We see rotation within stocks. And today is a prime example of seeing that rotation and seeing it happen in a very heavy fashion. And nothing new. We've seen this many times here over the last several years, but today is just a very good example. And kind of the opposite of what we saw yesterday. Healthcare, look, down 1.34%. Consumer staples, real estate, utilities, the safety sectors, right? The bond market, right? This is the new bond market. This is the new safety area. Yeah, it's always been a little bit that way, but it's to that way in a much bigger degree. And what are we seeing today? We're seeing money flow from, essentially, if you're talking 20 years ago, from bonds to stocks today, right? And, these safety sectors are all down and all down big, while technology, energy, financials, discretionary, industrials, all trading on higher, with technology yesterday's biggest loser leading the way here this morning as some Apple news, some Micron earnings have given investors a little bit of hope here and, has kind of helped a lot of these stocks bounce off of their lows from yesterday. But you take a look at something like J&J this morning, right? It's down $3. Any indication that was going to happen? Right? This is a stock. It was up and it was going. It was running. And, yesterday just kind of ho-hum normal. And then today, boom, rotation, bam, down it goes. And it is one of those where you look at how J&J trades and how something like a Pepsi now trades. They trade a lot more like what bonds used to trade like. And that's what we're seeing here today, at least early on this morning, is this kind of rotation from safety into more aggression. And, it's been happening while the market itself has been falling all morning. Yeah, market opened up. It bounced a little higher. But it's pretty much been falling the rest of the morning here. And, it's where some of the stocks that are down, like a Procter & Gamble, they're going down further. And some of the stocks that are up, they're just kind of holding in there. They're not getting sold, with any sort of aggression. They're just kind of, sitting there, hanging out while the market index itself falls. Now, you take a look at something like a General Motors, right, which is definitely not a conservative type of a play, but they're just rising all morning, right? Just continues to rise all morning. Boeing just continues to rise all morning, right? It's not like these stocks are trading with the rest of the market. Here's Apple. It's been a little bit different, but even with the market going down, Apple has been on the rise here this morning. There are a few exceptions. Facebook, which U.S. President Trump talking about, they should be sued with Google and just kind of more. More stuff on that end, but it's very much a rotational market here this morning, and it's a rotation out of safety and into some more aggression, and we don't typically see that while the market itself is falling throughout the morning. So very interesting morning. One of them's going to give. We're either going to see the market snap back very nicely and the rotation that's on today is going to stay, or we're going to see the market fall off and the stuff that money has rotated into early today is going to lead the way on the market falling off here for the rest of the day. We're going to see one of those two scenarios, I suspect. I do not suspect we'll see a flat scenario given what we have seen here so far. But anyway, that's a little bit here on the market open this morning. Now we had earnings after the bell yesterday by two companies. One of them, FedEx, and you can see FedEx. It's up a couple bucks here. Nothing too fantastic in FedEx earnings. It's one where I think if you're bearish on FedEx, you look at those earnings and you say, "Yup." And it's only going to get worse. And if you're bullish and you're looking for a place to get in, you can look at valuations on FedEx and go, man, this is just really cheap on a fundamental basis. And you can justify getting in, for the long haul. But, it's one where as I kind of gone through it, I respect the fact that it could go higher from here. I have to respect that fact given what the earnings were. But even FedEx's CEO said it. There's still a little more turmoil here. Still a few more headwinds here for FedEx. My question with FedEx is the market going to stop looking at those headwinds and start looking at some of the tailwinds that are going to come in 3 to 4 quarters from now? When do they start doing that? With FedEx, I think a little bit of a mixed bag, but something I'm still fairly bearish on. Micron. You can see this ended at 32.60 yesterday. I love the comment. Somebody knows something, right? And it was published on a website yesterday into the close of the market that somebody knew something about Micron, and Micron's going to fall on earnings because it's been falling in the last hour. It's been falling on volume, so the big money knows something. They know what's going to happen. They know it's going to go down. Okay, sure. Right, so much for that theory that we see kind of taken out a lot, but Micron up sizably here this morning. What's the significance? What's going on? Well, I want to do something here. Let's see if I can pull the screen over. I want to show you a news feed. This news feed is, and you can do this with any news feed, but this news feed is The Fly, which is one of my favorite, just because normally they don't put a lot of opinion in here. But I'm bringing in the news feed here just for Micron since the earnings. So Micron reports $1.05 earnings versus a consensus of 83 cents. Okay. They had a tax benefit that helped that in a nice way. Micron plans reduction in capital expenditures in full year 20. That's a positive from an investor standpoint. They tend to like capital expenditures falling, but that tends to be a long-term negative, but a short-term positive. Micron says it can resume shipping a certain subset of product to Hawaii. Okay, all right, great, fantastic. Micron sees Q4 earnings per share of 45 cents versus a consensus of 78 cents. Now, the market expected some of this, right? They expected a big drop in earnings expectations. Micron said it has mitigated 90% of the tariff impact. Okay, fine. New York Times, tech companies find ways to sell products to Hawaii despite ban. All right, fantastic. All right, now here come the analysts. Citi keeps a sell rating on Micron, thinks guidance seems optimistic, noting that the $1.08 a share was a tax benefit. Otherwise, the earnings per share would have been 86 cents. That's kind of a little bit of sour grapes. Everybody knows that. You don't need that to make your argument. But basically says he believes that Micron shares are close to a bottom, but keeps a sell rating on the stock here as he thinks the stock's going to stay under pressure due to the DRAM crash. Okay. Micron price target lowered to 36 from 40 at Piper Jaffray. All right. Okay. So they're going to lower their price target based on the earnings. Micron upgraded to buy from hold at Needham. All right. They put a $50 price target on them. Says that the improved DRAM outlook, right? We have one analyst saying DRAM crash, another saying improved DRAM outlook for the second half of the year. Okay. Says, hey, there's limited downside risk over the next 6 to 12 months. Okay. Micron results don't bode well for Western Digital. This is my favorite. Says Benchmark. Benchmark analyst Mark Miller says he believes Micron results and commentary don't bode well for Western Digital, given the company's lower than expected guidance for the quarter. NAND growth, bit supply growth is still high, 30%, expected to exceed mid 30%, blah, blah, blah. All right, so basically says, hey, Micron, not good for Western Digital. Keep that in mind as we go. Morgan Stanley keeps underweight rating on what Micron due to supply-demand gap. Micron guidance likely better than many investors expected from JP Morgan. And then here's my favorite. Western Digital upgraded to buy on Micron's NAND commentary. Wait a minute. Here we have Micron results don't bode well for Western Digital, and then here we have Western Digital upgraded to buy based on Micron's results. Why do I show this? I show this because when it comes to the semiconductor market, the analyst, the commentary, it is always so mixed. It is always something that is very skewed. And they can look at the exact same data and had come up to very different conclusions. And one of the big reasons is because the market changes rather rapidly. DRAM pricing, NAND flash pricing, it can change a lot faster than automobile pricing and pricing of other things in other sectors. So there's always a lot of mix here with it. But you think about investor expectations going into Micron earnings, pretty low, right? Micron has been absolutely blasted. You think about the short sellers, seeing what they see with Micron. Now they get a little bit of certainty about a few things. They're jumping out, and rightfully so here this morning. As I look at Micron, as I look at kind of the results and what has happened here, this is something where I don't think it is a all clear signal here for Micron. In fact, I would not be surprised to see Micron go and hit new lows, but it is likely to be something with a 3, 4, 5 day short squeeze here on it, and it's going to be a very simple trade. If it breaks below 35.70, breaks below 35.70, you short it down to 30 and go. And it's that simple. And if you want to get long, 35.70 is your stop. And that 35.70 to me is kind of that key point of saying reversals on, or shorts are still getting squeezed here with Micron. As far as Western Digital goes, read to you kind of two analyst commentaries. There's been some interesting option activity in this stock, buying way far out of the money calls, buying them, on the buy side, and very speculative, looking for a huge move in the stock. And if they're right, they will pay off very, very much. And we see Western Digital making a pretty sizable bounce here of late, coming back into some nice retracement areas here. Okay, so that's Micron, and then FedEx here. Micron earnings, I think you can look at them as a little bit more positive than FedEx. I think FedEx earnings, I think it only just kind of confirms the story, where Micron, it does give some hope that maybe the worst is behind it, but they are definitely going to need a trade deal between the U.S. and China, and that could cause even further short squeeze there with Micron. So those are the two earners. As far as how do they impact the broader markets going forward, I don't think either of them are going to be looked at by investors to say, well, I'm going to buy the market, or I want more exposure in the market, or I want less exposure in the market. I don't think we can say that about either here. Okay. All right. Now, 100K challenge is in all cash. It's been in all cash here since Friday. I don't like periods of all cash. Pretty annoying. But, we've seen two signals come in this week. FedEx on the bearish side, Walgreens on the bullish side. But both of them triggered ahead of earnings. Walgreens earnings are tomorrow morning. FedEx earnings were after the bell yesterday. So I did not trade them with the earnings on tap. We'll continue there, with that. If I don't really have a chance to run the trade, without earnings, then I'm going to let the signal pass and, move on from it. Now, this morning, I mentioned in my note that we could possibly see a bullish signal here out of Chipotle Mexican Grill. This is one that tried with that 3-7 crossover yesterday, had an upgrade this morning, was trading a little higher in the pre-market, but as it opened up, it was quickly apparent that, no, it's not ready to go, and so we do not have a signal. In fact, it has a downside crossover on it here this morning after yesterday's small upside crossover, just kind of dancing there with the 3-7, a very typical sign of consolidation, and not trend here, or not moving into a trend phase, and that's what we have here with Chipotle. So no signal there. I am running here as we speak. I am running the scan on my other screen here, just to see what signals are possibly coming in. Before I got on video, we saw Las Vegas Sands with a 3-7 upside crossover coming in, and we saw Micron with a 3-7 crossover. Micron, there's no chance of being a signal. Why? Because it has moved well over two average true ranges to get the 3-7 crossover on it. The average true range is $1. Well, yesterday was about $1.30, and it's moved more than 2 times that here to create the signal, so it won't count as a signal. And then Las Vegas Sands, which let's see here where it's at. This could trigger by the end of the day. This was a downside 3-7 crossover yesterday. Didn't trigger bearish. Getting an upside crossover here today. We could see this trigger bullish. It looks like it's not triggering here right now, but it could by the end of the day. And then on the downside here with some downside 3-7 crossover action, we have a few stocks. One of them, Chipotle, that I mentioned here. We have Honeywell. With the downside 3-7 cross, but this is kind of like Chipotle, right? There's been a nice run up. It needs that consolidation. Kind of has, just that action associated with it. Procter & Gamble getting hit aggressively here today. Downside 3-7 crossover, but you'll see it's still trading above a rising 20-day moving average. It's up near highs, coming off of highs. So nothing there to trade. And then a downside 3-7 crossover on Raytheon, and this one, we've pulled off the watch list here, simply because of the merger here with the United Technologies, and here soon I will be adding United Technologies to the watch list, but I do want a little more time to go by, since the merger announcement, and let the charts kind of reset here with those. Okay, so no new signals on the board here this morning. I'm not, incredibly surprised. We talked about it, Friday and Monday, just as kind of we went through a lot of the charts. A lot of these charts just need a little bit of reset, to give some 3-7 action that would be indicative of trend mode. And until then, we're likely going to see, chop come into play. And that's what we have seen. And, it does look like there's a risk of it continuing for a little bit longer with that chop. But, hey, as soon as we get some signals, we will go after them and, trade them aggressively. It's, we're falling behind the pace as far as number of trades for the challenge. Now, we're definitely falling behind the pace now in terms of just raw number of trades. Now, we're still well on pace for, the 100K mark. But, it would be nice to see some trades come in here sooner than later. Okay. As I mentioned yesterday, I will be away here. I am leaving the office here right after this video. I will be back for the close here today, or for the 2:30 video. But I will be out here this morning. Any questions? Let me know. Have yourselves a fantastic day, and we will talk to you this afternoon. Take care.